Hello and welcome back to another portfolio update. In today's video, let's go over a couple of things that happened this week that affected the portfolio. We've got some incredible news straight from the White House. We have a new earnings week coming up, more macroeconomic data to talk about in this video. So as always, let's start off with the performance of the portfolio. In the past week, we are up just over 1%, whereas the S&P 500 was actually down 0.43%. Now year to date, we are still underperforming, but barely. We're down 4.42%, whereas the S&P 500 is down 3.7%. Since the start of the portfolio, we are of course crushing it. We're up 52.59%, whereas the S&P 500 is up 13.6%. Now I'll first start off with the major move that I made this week, which was not anything to sell, not anything to buy, but it's actually an increase of the cash position. It's now 2.46% of the portfolio. It was closer to 0% before. Just added some cash here to play it safe as we go even further down this earnings season. For the rest here, nothing much has changed. We have SoFi, PayPal, Alphabet, of course, took a hit. We talked about that, but we're back above $150 there. PayPal back above 70 and SoFi back above $13. And by the way, these are the performances on Friday. If you want to see the total performance, this is basically it. Uber reported earnings. We did a full earnings review video on the channel when that happened. Uber back above $82 here, still performing very well. One of the best performance actually year to date. Then we've got Micron here. Micron, they only report earnings, I think mid-June or something like that. Intel, Alibaba will report earnings Thursday. We've got Tesla, which was back above $300, closed just below that. Then we've got AMD reported earnings as well. Pretty good, nothing special. We're back above $100. Rocket Lab did drop, I believe, 11% on Friday. We're still above $20. All in all, I got the information that I wanted. Meta is making its way back to $600. Then we've got Nebius. I did a specific Nebius video on Sunday. If you missed that, that will be in the top right corner. After hours on Friday, Nebius is up another 8%. So we're actually closer to $30 right now. It's a small position, all things considered, but I'm already up over 20% with the after hours action. Then we've got dLocal. This is one that once it starts to go up, it will probably go up in the rankings here because I do have a decent amount of money in it. Around now $9,000 is the cost. Now, of course, it's down 8.6%. So once that goes up, and I believe earnings for them is May 14th, so in the next couple of days. And then we've got the smaller ones, Celsius, Appcelera, Owlet, 1 share of Palantir, and 1 share of Nvidia. And for those that are new here, this is the public portfolio. The core portfolio, which I started back in 2016, is basically Amazon, Meta, Tesla, Mercado Libre, Alphabet, and PayPal. They make up right now over 90% of that portfolio. Moving on to the huge news that could definitely make the stock market explode and actually go on the way up, would probably mean panic mode for all the shorts, all the doomsday lovers, the ones that have said time and time again that the economy is going down the drain, this is the end of the world, a reset is happening, etc., etc. For those that did buy quality companies for very, very attractive prices over the last couple of weeks, congratulations. I had to add congratulations because otherwise this sound was a bit PG-18. But anyways, we continue. This was a press release by the White House. US announces China trade deal in Geneva. Now, the wording here is of course a bit strange. And by the way, this is released May 11th, my birthday. So I think legendary day, I would say. We first have some comments from Secretary of Treasury Scott Bessent. I'm happy to report that we made substantial progress between the United States and China in the very first important trade talks. First, I want to thank our Swiss host for the chocolates, obviously. The Swiss government, the chocolate part is not part of the quote. I hope you all know it. The Swiss government has been very kind in providing us this wonderful venue, and I think that led to a great deal of productivity we've seen. We'll be giving details tomorrow, but I can tell you that the talks were productive. We had the vice premier, 2 vice ministers who were integrally involved, Ambassador Jameson and myself, and I spoke to President Trump, as did Ambassador Jameson last night, and he's fully informed of what is going on. So there will be a complete briefing tomorrow morning. As for the US trade representative, this was, as the secretary pointed, a very constructive 2 days. It's important to understand how quickly we are able to come to agreement, which reflects that perhaps the differences were not so large as may be thought. That being said, there was a lot of groundwork that went into these 2 days. Just remember why we're here in the first place. The United States has a massive 1.2 trillion trade deficit, so the president declared a national emergency and imposed tariffs, and we're confident that the deal we struck with our Chinese partners will help us to work towards resolving that national emergency. So just so we're clear, we're not done just yet. This is just a very, very good first step in the right direction. Now, I am going to give here a 30% chance that some dude in China will say that this is not true, as we've seen them say time and time again after we've heard positive statements from the United States time and time again, so that there is always a chance of that happening. Now, we also got some comments from the White House economic advisor. The Chinese are very, very eager to engage in talks, rebalance trade relationships with the United States. More trade deals could be coming as soon as this week. Commerce Secretary Howard Lutnick has briefed me on about 24 deals he and the US Trade Representative Greer are working on. So we are definitely going in the right direction. There is some momentum right now when it comes to trade deals. And so tomorrow we will probably see green across the board. We'll first start, of course, with the European markets and then the US one as well. So great for us, bullish and long-term investors. Now, talking about long-term investors, talking about earnings season as well, this is what we're looking at for the next couple of days. We've got, of course, Monday reported on Monday. I mean, if that wasn't the case, should have shorted that stock. Sportradar is one that we've talked about a long, long time ago. After the market closes, we've got Rigetti, Plug, AST Space Mobile, Archer Aviation as well. On Monday, I probably won't even cover any of those companies, to be honest. On Tuesday, we've got JD.com, Sea Limited, Intuitive Machines before the market opens. After the market close, you can expect a review of new holdings, unless the earnings call is on Wednesday morning, depending on how that works. And then on Wednesday, we've got Cisco, CoreWeave, and I guess that's about it. On Thursday, before the market opens, pretty big deal, I'd say. Alibaba, Walmart, John Deere could give us a lot of information about those specific industries. After the market closes, Applied Material, Kava, Doximity, Take-Two. I assume that they're going to take more than 2 hits after that GTA 6 delay yet again, but hopefully we'll get more information during that earnings call. Looking at some market data here. So this is the S&P 500 after the VIX falls for 5 straight weeks with a total decline exceeding 10. Well, we don't have that many data points to work with because yet again we were in a quite particular or peculiar or particular? One of the two, if not the two, correct me in the comment section. Maybe I should take some Duolingo classes. But anyways, this is the data that we're working with. Here you can see what happens with the S&P 500 a week later, 2 weeks, a month, 2 months, 3 months, etc., etc. And as always, the further down we go, the better the odds. Although it says here 1 month later, previously 100% of the time we were green, and even 2 weeks later. So the odds are definitely here in our favor. In the short term, not so much. 40% of the time we were green, but on average, we were actually up 0.18%. Now here we've got a little bit more data to work with. So the S&P 500, after it gains over 13% in the past month. And here again, the odds are in our favor, whether you look at it 1 week, 2 weeks, a month, 2 months, 3 months, 9 months, a year later. It's all above 50%, which means over 50% of the time, the S&P 500 was green. Of course, there's a big difference between being up 0.4% or being up 4.4% or double digits. Now, the last two things I want to focus on are, well, these two things here, which are pretty similar. One is, of course, an investment cycle, I'd say, or should I say maybe a sort of a bubble forming. And the other one is just the psychology of a market cycle. Why am I showing you this? Well, because we do have a lot of green right now after having a lot of red. Tomorrow we might even have more green. So it's always important to have our emotions in check. Now, I'm not saying we are in a bubble. I know a lot of people are saying that we are in the AI bubble, etc., etc. I don't think we are anywhere near here the new paradigm or return to normal or something like that. Yes, it's true that we are probably past the smart money phase. We might even be past institutional investors, depending on which company we're talking about. But mania phase is, I mean, the word mania is maybe a bit too extreme to use here, but I do think that we are here in the public phase. Now, this one right here is to me a bit more important, and this is, I mean, to me, this is one of the most important things that you have to, well, have in your mind as an investor. It's great to know the numbers, to look at the data, do the math, etc., etc. But sometimes, if not most of the times, emotions are the reasons why you will make or lose a lot of money, right? What we're seeing right here, all of this optimism, belief, thrill, euphoria, even complacency, this is what we've experienced in 2020, 2021. Myself included. If you've been following me for a long time, you know that I took this crash, the bear market of 2022, very, very seriously, which is why I started 2025 with a lot of cash, a lot of profit taking. Now, some might say that, look, okay, we've had the crash of April. I mean, since February, the markets went down, a lot of stocks went down quite a lot, and now we're having a rally. Maybe it's not a real rally. Maybe it's just the pump before the dump. And then we are going to have anxiety, denial, panic, capitulation, anger, depression, and then disbelief, which is, this is a sucker rally. But once you reach disbelief, you get hope, and then you're making your way back up and up. A couple of extra things here. And since we are here on YouTube, I, of course, get to see all of your comments. So I know exactly what the sentiment is each and every time. Now, of course, it might not be science, but usually it works out pretty well. When things go down, and I just made a video about a certain stock, usually I'll get the comments like, haha, this didn't age well. But then if I go back a month later, maybe that comment did disappear. For example, a stock went down 5% after I make a video. Haha, this didn't age well. A month later, that company is up 20%. A year later, it's up 50%. 10 years later, it's a multi-bagger. You know how this works? Emotions, right? If one day after you bought, a stock is down, you think you're an idiot. But no, you're not an idiot. The markets might be idiotic. The markets might not see the long-term future. That's fine. You're going to tell me that the markets are never wrong? No, the markets are wrong more times than not, especially in the short run. In the long term, I mean, we're all pretty smart, so when we know we've made a mistake, usually we correct ourselves, and that's why in the long term, the markets are usually very healthy. Now, short term, a lot of things can happen. Short term for a lot of companies, specifically now in this AI phase, or remember the quantum phase, yes, things might actually accelerate and go to this new paradigm or go to euphoria very, very quick. And then we do go down very, very quickly to anger. Things are, of course, moving much quicker today than they did before. Data goes from one way to the other extremely rapidly. But if we're looking at the markets as a whole, no, I'm sorry to say, I don't think we are in euphoria. Don't think we are in complacency either. Yes, we are making our way up. Are we back at peaks? I don't think so. I think we're far, far away from the 2021 peak. And so all in all, that's about it. Be prepared for another volatile week where we get even more information, whether it's because of trade deals, macroeconomic data, earnings reports. You'll get all of it. Of course, I'll try and cover as much as possible on the channel. If you're new here, subscribe. Almost at 90,000. So hit that button, and I'll see you all in the next one. Bye-bye.